We begin this evening with records being set on Wall Street. All three of the major indexes, the Dow, the S&P 500, and the Nasdaq, closed at records. Financials rose, and there was optimism about tax reform. And that enthusiasm put investors in a buying mood. So here are the closing numbers for you. The Dow Jones Industrial Average gained 61 points to 22,118. Its gains were capped, however, by a decline in the shares of McDonald's, following a downbeat research note. The Nasdaq was up 22, and the S&P 500 added 8. But ask anyone who invests in this market, and they may have a different take on stocks and where they may be headed. The same is true of well-known investors like Omega Advisors' Leon Cooperman and Tiger Management's Julian Robertson, who says stocks are in a bubble.
The market as a whole is quite high on a historic basis, and I think that's due to the fact that interest rates are so low that there's no real competition for the money other than art and real estate. And so I think that's why the valuations are so high.
The stock market is own a fair but full valuation. That doesn't mean it's overvalued, but rather I think it's priced to appreciate in line with earnings. I'll call that 5 to 6%.
Those two investors spoke today at the Delivering Alpha conference presented by CNBC in New York. Also in attendance was Treasury Secretary Steven Mnuchin. And as Tyler Mathisen tells us, it was his comments that tax reform is a top priority that helped give stocks a lift.
Hi, Sue. Delivering Alpha is the foremost conclave of people in the institutional investing, hedge fund, and private equity worlds. And we began today hearing from Treasury Secretary Steven Mnuchin. He was, frankly, optimistic about the probability of getting something done on tax reform before the end of the year, but less optimistic about what the ultimate corporate tax rate will be.
The president has made it clear since the campaign, ideally, he'd like to get it down to 15%. I don't know if we'll be able to achieve that given the budget issues, but we're going to get this down to a very competitive level.
The man who leads the largest private equity fund in the world, Stephen Schwarzman, shares Mr. Mnuchin's optimism about getting something done in terms of a tax cut and tax reform. But he also shares Mr. Mnuchin's view that getting the rate down to 15% is going to be a heavy lift.
I'm optimistic that the worst we'll do in that area is a tax cut somewhere between 25 and 28%.
As for economic growth, Ray Dalio, who runs Bridgewater, the largest hedge fund in the country, said that he thinks we're in a kind of 2.5% zone for growth. Here's why.
We're probably in a 2.5% type of growth environment. I mean, the real question is to some extent whether you can unleash the productivity by some of the changes that a pro-business environment can produce. I think there was more hope for that.
And speaking of growth, Jamie Dimon of J.P. Morgan Chase says that 2.5% growth, he doesn't view that as a new normal. Here's why.
If we did things right, we'd be going to 3%. But this growth, by the way, we've had over the last 8 years has averaged a little bit less than 2%. It's half of the norm. Okay, so it's a long recovery, but it's half of what we would have had in a normal recovery.
All in all, Sue, a big day of big thought and big insights from the Delivering Alpha conference here in New York City. It was a day where we heard from the Treasury Secretary and some of the really top people in the world of hedge funds, private equity, and institutional investing.